Finance for you. Thank you. Now let's proceed with the role of MDBs. The real money will come from the multilateral development banks. And may I request Deepak Mishra, Director and Chief Executive of ICRIER. He'll be moderating the session. This session has a different format. We will be having a keynote address from Shri N.K. Singh. He is former chairperson of 15th Finance Commission, former Rajya Sabha MP, distinguished and very respectable name in the global finance world. And plus he is also member of the board of Governing Council of Council for International Understanding. N.K. Singh ji will give us the keynote address, and then the panel discussion will happen. In the panel, we have with us Pankaj Gupta. He is Director, Infrastructure, World Bank Group. Micheal Steidl, he is Head of Regional Representation to South Asia at European Investment Bank. He hasn't joined his Delhi office as yet, so he'll be joining us from Europe online. Shri Amit Prothi, he is Director General, Coalition for Disaster Resilient Infrastructure, CDRI. Shri Shalabh Tondon is South Asia Regional Head, International Finance Corporation, IFC. Deepak, please bring your panelists. After lunch, we all have energy, so give us a thunder of applause. You have some of the best minds in the country to discuss the MDB finance and the project. This discussion is very crucial because World Bank will be, discussing some of these issues at their spring meeting. Deepak, you have a very important discussion in your hand. Now, mic is yours. And Deepak, my request is please keep one eye on the timer, please.
The time is 25 minutes. I was told it is 30 minutes. But anyway, thank you very much, RIS and CIU.
We are running late, so we are cutting.
Yeah, I know. Yeah. No, thank you very much for this opportunity. So let me begin by just saying that, of course, you have heard this many times, but in September 2023, when India hosted the G20 summit, there were many achievements, but two of them which really stood out, at least in my mind. One was the IMEC, the announcement of the India, Middle East, Europe Economic Corridor, and the second was the endorsement of the G20 Independent Group on Reforming MDBs. The second one was actually headed by Mr. Singh, who was a co-convener along with Larry Summers, and this session brings the two topics together. So it's about how do we finance, or the role of MDBs in financing IMEC projects. So it's a wonderful session to get the two things. A lot has happened since the Indian summit was over in last 18 months. I would say IMEC has gone up in terms of its recognition, because the MDBs have lost a little bit of steam in all this thing that's happening in Washington these days. So we are going to hear from people who have been very deeply involved, both in shaping the G20 agenda, the ideas that we are going to talk about, also people who have been very deeply engaged in infrastructure financing around the world. So we have a very high-powered panel, and I don't think I need to introduce any of them in that detail, and we also don't have time, but let me start by saying Mr. Singh is going to give us a keynote address, and he was the co-convener of the G20 Independent Expert Group. The group submitted two reports. Both of the reports were endorsed by the leaders, and subsequently every global fora that has taken place on MDBs have referred back to this report. So this has been very meaningful, impactful report, and I had the fortune of working ICRIER as the secretariat to this independent expert group. Mr. Singh is also the chairperson of the 15th Finance Commission. Let me begin by requesting Mr. Singh to give us a keynote address for about 7 minutes, and then we'll proceed to the panel discussion, and I'll set out a very quick context for them as we start that process. Over to you, Mr. Singh.
Well, thank you very much. I'm grateful to the organizers for having begun to refocus once again on this issue of the role of the multilateral development banks on this very important subject of the India, Middle East, Europe economic corridor. I don't want to go into the virtues of this economic corridor, the economic multipliers, the productivity gains, and all the rest of it. We've heard that at some length in the earlier sessions. In the limited time that is there, I want to just make Deepak 5 points. First and foremost, what is the order of financing which the implementation of the IMEC would need? Based on some estimates which have been done by Observer Research Foundation, by the European Council on the Foreign Affairs, by the Abdullah Group and so on, the order of financing which is needed is in the region of about $500 billion plus. How do we get $500 billion? The financing module which has been suggested is that 30% may come out of philanthropies, 20% may come out of multilateral development banks, and the balance may come out from private capital in terms of public-private partnership in some meaningful way. So let's now look at each of the ingredients of this. The most critical ingredient of this is the catalytic role that multilateral development financing institutions can play. In which way? In 3 ways. First of all, in being able to provide the core capital, which is needed at 20% of this $500 billion plus, which is very important. Second, in terms of the ability to be able to harness the 50% of it, which is the private capital, and without the support of the multilateral development banks, but providing a core component of 20%, you will not be able to harness half the amount of financing which is needed for the completion of this project. So the 20% becomes very critical. On the 30%, which is coming out of philanthropy, I think this is a new, Deepak, this is a newfangled idea. I'll tell you from where this emanates, something which you must be familiar with since we worked on this closely. You remember when we were doing this, we wanted to open a third window. We called it the triple window. We called it triple finance, triple window. So this was the tripling component of it, triple objective, triple window, and triple financing. That's what the report was about. That's why we called the 2 reports, we called it better, bolder, and bigger. The last 2 were contingent on the first, better, but I have no time to go into that. Now, I think that in terms of, therefore, how do you harness the 20% from multilateral development banks, that is a core component. My second comment is, when we talk of multilateral development banks, we must recognize that the World Bank is the most important, most resource endowed, but it's not the only multilateral development banks. In fact, when I began the study, I came to the happy conclusion that there are a number of multilateral development banks which we had not heard of. Let me allow you a guess. How many of you would have heard of a Black Sea multilateral development bank, but it exists? So the multilateral development bank as a family extends far beyond the capacity of just the World Bank. That's the second factor which we need to take into account. Third very important factor is that how do we harness more imaginatively and more creatively, private capital in public-private partnership. What are the key components to mitigate private sector risk? Is it in terms of mitigating for foreign exchange fluctuations? And what kind of institutional structure and foreign exchange fluctuations do we need to mitigate risk capital? How do we make use of guarantees in a more imaginative way? You know, Deepak, when the COP29 presidency was being held by the UAE COP29 president told me that, look, instead of taking money from UAE, why don't you take my money and do it by way of guarantees? Because guarantees have a multiplier effect. You can do it 3 times, 4 times, 5 times, and that will allow you the reach. So guarantees. In terms of blended finance, which is an exceedingly important and a growing area, in terms of the cascade principle of not entering into areas where private capital is more readily available. So risk mitigation and harnessing private capital remains the #1 daunting challenge. My second last point is this. Who are the owners of this corridor? So whoever the owners are, the owners must become active partners in being able to put together a financing structure which is credible in terms of the meeting global standards of project feasibility and viability, and they must become important actors. So far, Deepak, the most important missing link in this process is we talk about the multilateral development financing, but there is no application before any multilateral development bank. How do they apply their mind? Who has applied their mind? Who has approached the multilateral development banks? How do they begin to even look at it in a credible way? And that is my last point is, the time is now. The time, that is why I think that putting together this conference on this day is an exceedingly timely initiative. And I compliment the organizers, I compliment all who have been put together. I compliment them for the last thing, and that's my last point. Deepak, we are 10 days away or less from the spring meeting of the IMF and the World Bank. This spring meeting will have a get-together of all finance ministers and the governors of the central bank. This is the opportune time of all actors who will be actors and stakeholders in the IMEC to impress upon the owners of these multilateral development banks that there is a purpose behind this. And the purpose behind this is it is well accepted that global commons is something which is the aspiration of all countries across the globe. So, while complimenting the organizers for this particular timely initiative, this is the opportune moment for us to push ahead and engage credibly with the multilateral development banks, beginning in Washington 10 days from now. Thank you very much.
Thank you, Mr. Singh. That was a wonderful exposition of and setting the context for it and also sticking to the time. So now we'll turn to the 4 panelists. We'll start with Pankaj Gupta, the Director of Infrastructure for World Bank. We'll followed by Micheal Steidl, the Head of South Asia Region EIB, and then Amit Prothi, the Director General for CDRI, and then Shalabh Tondon, the Head of South Asia IFC. Just to set the context for you guys, let me just put out 3 things. I think Mr. Singh mentioned something very important, which is, are MDBs the missing link in this whole project? In a sense, how is the IMEC been seen by the MDBs? Is it a competition to you guys, because many of you are in the same business of creating infrastructure, or is IMEC a complement to many of the activities that you're doing around the world. The second is the point about direct versus the indirect cost, how much of the funding could come from MDBs versus how much leverage through the private sector, and that's such an important part which often gets underappreciated. And third, just to be provocative, because this is an intercontinental infrastructure projects, are there any lessons from BRI and similar projects around the world that you want to tell to the Indian audience about it? So Pankaj, over to you. Sadly, only 4 minutes. Thank you.
Thank you, Deepak. First, let me just sort of say I'm very honored to be here, sort of representing the bank, with yourself, sir. And I think I truly sort of, fully empathize with the points you made. And let me just take a step back and sort of, I asked my team to look at the history of the bank and its involvement in these kind of projects. And it turns out for the last 40 years, we have been a part of most of the sort of multi-country sort of involvements in rail, in road, in power transmission, and so on and so forth, and across all geographies. So I think there is a wealth of information out there. Then we started to look at, actually what are we doing today? So we are involved in many of the other corridor thinking. How are we involved there? That was the next question to ask. And I think therein it becomes very important that how do us MDBs look at things? We look at first, what are the alternatives, right? Look at the economic assessment of these corridors. Try and bring some rigor to the analysis that's being done. Look at what is the prioritization of investments. The previous panel spoke about breaking the investments up into more financeable approaches and into more financeable deals. But I think what's most important in all of these examples and all of these experiences has been the role of the MDBs as a convener of the parties, right? So I represent South Asia's infrastructure business. I have a peer that represents the sort of Middle Eastern sort of infrastructure business. But we're the only institution out there that actually have a presence and the ability to bring the global knowledge from across all regions, and the ability to pull multi-countries all in one room. And I think that convening power, along with the fact that we are an honest broker, in some ways all of the clients are our clients, right? All of the countries are our clients. So we don't pick and choose one client, but actually try and make sure that these corridor projects or multi-country projects, they're fair and equitable. And that goes back to what are these lessons learned. So the first lesson we have learned from these kind of projects is inclusive design. That it's not about the winners and losers. We have to make sure all participants in the corridor projects are equally benefiting, not by the volume, but by the size of the investment and the size of effort they're putting in. Institutional cooperation, I think that becomes the backbone of how these things are long-term sustainability of these, sort of corridors happen. And until India creates an institution, other entities create institutions that can actually talk to each other and actually make these projects happen, it'll always remain a dream. So that becomes very important. A strong foundation in now, which is becoming even important, is more resilient infrastructure, because we will see a lot of hazards and a lot of climate-related issues popping up. So how do you build in resiliency in this infrastructure becomes important. A multimodal approach. A few years ago, it was just about roads. Then it became just about rails. Now we are talking about from digital activities to power projects to road, to rail, shipping, multimodal approach. So this is the right approach to go in there. And then 2 points very important, which are the softer pieces of the integration of the soft systems. We have built roads across 2 countries, across 3 countries, but until you fix the custom barriers on the border, things don't move. So those kind of issues become important. So herein the bank can play a role in terms of financing, but I think more than financing, it is, at this point in time, the convening role becomes very important. Thank you.
Thank you, Pankaj. That was very helpful. Micheal, over to you. Can you hear me?
I hope you can hear me.
Yes, we can.
Very well, everyone. Thank you very much. Thank you very much for inviting me, the European Investment Bank. I hope that's not one of the banks that you mentioned, that one of the multilateral development banks that nobody knows. We're obviously a little bit less known in a country like India, because we have less of a footprint than the World Bank or the Asian Development Bank. But I mean, even there we have a accumulated signature volume of around 5 billion euros. We actually consider ourselves even to be the biggest multilateral development bank in the world. We have around 88 billion of annual signatures, 90% of them in Europe and 10% outside of Europe, which is, again, while we're a little bit less known outside of Europe. But it's important because we're talking here of IMEC. That includes Europe. No, it's the India, Middle East, Europe corridor. So I will come back to this a little bit later to explain why this is important. So first of all, we as the EU bank, we support we fully support the development policies of the European Union, and we usually finance projects that are in support of that. And the European Union has actually very high on their agenda the IMEC as a flagship initiative. I am actually, contrary to what was announced, I'm actually already have taken my position in Delhi in February this year. I'm just at the moment in Luxembourg because of Easter holidays. By the end of February, we had in India the visit of Ms. von der Leyen and the complete College of Commissioners. Some of you might remember that. It was actually a unique event because it was the first time that this whole College of Commissioners, 23 commissioners plus the president, came at the same time to India and talked to their counterparts. And so Ms. von der Leyen held a keynote speech there. And a big part of her keynote speech actually touched the IMEC. And she mentioned several areas where infrastructure development is very important for the IMEC. So she mentioned the rail link that can reduce time of cargo traffic to Europe from India in about 40%. She mentioned connectivity through internet cables, through high-capacity fiber cables. She mentioned pipelines for the delivery of green hydrogen, for export of green hydrogen from India to Europe. And she mentioned transport links and links in general. So especially in this undersea cable, for example, and this is a concrete example where we're actually already active. So the EIB is currently in the moment of preparing a project that's called the Blue Raman project, which is an undersea cable, undersea and oversea fiber cable that actually will go from India via Djibouti, Saudi Arabia, Jordan, through the Mediterranean to Italy and then France. So we're actually preparing, as part of this, a 90 million euro project. So we see this overall as a 450 million euro project, and we're about to approve a lending of 90 million euro to Telecom Italia, which is the borrower in that sense. So we're actually, this also should answer one of the questions that you had. Do we see this as a competitor or as something complementary to what we do? Actually, we see this as a very important project where we as the EIB will actively contribute to many of these initiatives that are mentioned. Here in this sense, teaming up with the private sector, with Telecom Italia, to finance a good portion of this important infrastructure endeavor. I think you said 4 minutes, so my time is already up. But in case there are questions, I'm happy to be here, and I hope that you get a little bit of impression of how important this initiative like the IMEC is for the European Investment Bank.
Thank you very much. I think that was helpful. Even in the short time, you gave us some very important points. Somebody just fiddle with the clock and reduce it with, but I'll anyway go for at least 5 more minutes. But so Amit next. Thank you so much,
Deepak, and thank you so much, sir. I think you've been the genesis, from what I've understood, of the whole disaster risk reduction thinking in India. You've been very much part of it. And it's really a proud moment for me to be sitting here. When I was asked to talk about
in this session, I represent a multilateral entity that has been set up by India. CDRI, the Coalition for Disaster Resilient Infrastructure, is actually not a bank. So I was curious why I would be here, but actually, you talked about the whole need for resilient infrastructure. I think today we could not be thinking about infrastructure, whether it's local, regional, or beyond, without acknowledging that we are sitting in a world which is getting much more warmer, and infrastructure is getting disrupted again and again and again. The Dubai flood was an example, and again we're seeing reoccurrences of disasters that are actually affecting bottom lines. When you're doing your cash flow analysis and predicting a certain amount of cash flow coming back to you, there's enough evidence, and even we've done some analysis that shows about 4, 5, 6% of your infrastructure will get damaged in its lifetime. And the economic cost of that is a multiplier. So here is a fantastic opportunity to think about, when we're thinking about attracting financing from various actors. Today, the question is being asked, do you understand your long-term risk from climate change and other national hazards? So CDRI actually has been, in a way, I'm very proud that today the 45th country has joined CDRI. Kenya just joined the coalition today. So we're already starting to bring together countries around the agenda that India championed by first setting up CDRI, but also then setting up the DRR working group during G20. Acknowledging that we have to pay a lot more attention of how do we address the risk of disasters in our investments going forward. IMEC provides a fantastic platform to think about how do you innovate in this space. The MDBs provide a fantastic way of saying, we can understand risk because today data is allowing us to understand risk. We can push policies because today one can start to imagine codes and standards that can acknowledge the risk to the infrastructure, as well as guarantee that, if you build it to a certain standard, you're not going to lose it in the lifetime of that infrastructure. I think the opportunity for IMEC and, okay, I'm being asked to wrap up, so let me just leave it there. Innovation, particularly for thinking about how we address disaster risks with data, codes and standards, and also the new training that our engineers actually need. Stop there.
Yeah, no, thank you, and I'm so sorry for cutting you off. There's so many interesting things that you want to say. But for us, CDRI is the MDB that was conceived in India. So you guys are the MDB, at least in our eyes. But next, and our last speaker from the panel is Mr. Shalabh Tondon. Over to you.
So thanks. So very quickly, in projects like these, which are complex across multiple countries, as my colleague Pankaj said, our colleagues on the World Bank side come in before IFC because they help in designing and conceptualizing projects which later on the private sector can take up. So that's number one. Apart from, I would like to re-emphasize something that Pankaj said, which is convening power and honest broker role. There is also an honest broker role that IFC often plays in projects where there is an international partner and a domestic partner. So there are JV partners in which IFC comes in with a small stake of, say, 10% equity and plays the honest broker role. And I think in this corridor, there will be ample scope for that. I'll add a third point to what Pankaj said, apart from these two roles, is institutional capacity building in each of these countries. Right now, which is the anchor coordinating body as an institution which is empowered and vested by each of the host governments to actually design these projects which can be taken up by the private sector, which are the projects which can be done on a government-to-government basis with just government funding and grant, which are the projects that are amenable to PPPs, which are the projects which are low-hanging fruits, as the earlier session was discussing, which can be done by private sector irrespective of the geopolitics, which none of us can predict very easily over a decade how the geopolitics will pan out, whether the trade will be there, whether the market risk is there, and so on. So which are those institutions which are empowered to do that? That's another role that the MDBs can play. And finally, in the interest of time, we've had experience as IFC in doing cross-border public-private partnerships. a famous example comes to my mind, which was a very difficult project, was the Chad-Cameroon gas pipeline, where IFC was a lender. And it went through a lot of troubles in both financing and even post-financing. And I think the key lesson that emerged from there was never to undermine the value of stakeholder consultation and common standardized framework and jurisdiction legal agreements as you design these projects. Something less complex, which has been successful, has been scaling solar in Africa. And I know Ashish is here from International Solar Alliance, where we have done multiple country projects. Let me stop here in the interest of time. Thanks.
Thank you very much. I'm not going to say any more words. Over to you.
Thank you. Thank you. Hello. Thank you. Thank you, Deepak. Thanks more for understanding the time paucity. Now, may I request Professor Sachin Chaturvedi to come forward and help us in felicitating the gentleman. We really had wonderful conversations, and when money matters, the conversations never stop. Ladies and gentlemen, Mr. N.K. Singh. The country will always remember N.K. Singh, the way he handled a lot of discussions related to money. Mr. Prothi, he is helping the world make disaster-resilient infrastructure. Mr. Shalabh Tondon. And a lot of thanks to Deepak for holding the conversation together. Ladies and gentlemen, more louder, more louder, more louder. Thank you, gentlemen. Thank you very much. Thanks for making us richer with the knowledge and understanding of not only how the infrastructure finance